Hey guys, what's up and welcome to a new Tesla update video. So yeah, as usual, let's just jump right into it. Let's discuss what happened in the market today. Yet another brutal day. So yeah, the markets we'll talk about it. I know some of you might be worried, freaking out, whatever. You know, let's talk about it. Cool, calm, collected, if you will. You know, chill. Let's not freak out, and let's assess this. Without emotions, right? So if you guys enjoyed, by the way, don't forget to hit that like button, subscribe, all that good stuff. Let's just get right into it. So Tesla ending the day down almost 7%, actually, 6.81%, down to $709.75. Compared to the QQQ, however, actually not doing that bad, which sounds weird. I mean, Tesla's down 7%. For me to say, yeah, I actually didn't do that bad, sounds weird, but it's true because QQQ is down almost 5%, guys. 4.93% on the QQQ. That is insane for the QQQ. Like, that's insane. Crazy downward pressure. But again, keep in mind, Tesla usually is, on average, I guess you can say, moves around 2x of what the QQ does. So essentially, in this case, if QQQ is down about 5%, Tesla in theory should be down about almost 10%. We're down almost 7%. So that's not bad. Tesla actually, believe it or not, as hard as it is to probably believe, is actually outperforming the market, which is good. That's a good sign. Now, a lot of you guys might be freaking out, going, "What the hell happened? What the hell? Blah blah blah. I thought you said it's gonna go green. I thought there's more green. But blah blah blah." God, specifically in the video, I did state how, even though I believe overall the uptrend, I do think that we are going to be overall uptrending up. That's not to say that it's going to be straight up, and I specifically stated how just because we had this candle doesn't necessarily mean that we're just going to rock it up to 840 or something like that literally tomorrow or the next day or even this week. I did say that we're still going to be getting red. I'll admit this is more red than I thought. I don't think it'll be this bad. I thought maybe we'll come down to 725 or something like that. I don't think we'll actually come down to literally 700 again, which is pretty wild. I'm not gonna lie. We didn't go exactly to 700, but we got pretty close. I think the lowest we got was actually, yeah, it's like 701 pretty much. Yeah, pretty damn close. I don't think we'll go that low, but nonetheless, it doesn't really matter too much. And the reason it doesn't matter too much is because we're still making a higher low, which is good. That's the main thing I want to see, right? The most important thing that I want to see is that we're making a higher low. So based on what we fell over here, we fell all the way down to this kind of, 681 level. Now it does seem like, in theory, we're going to be bouncing off this 700 level, which again, ultimately is a higher low. And I'll give you guys a few reasons as to why I believe that with other charts as well. That's not Tesla, but it's related to Tesla and the market as a whole, which obviously, is in one big package and, kind of moves more or less together. But regardless, Tesla has about 27 million volume today. Again, nothing too out of the ordinary for the recent market, right? It's just kind of more or less in line with the average of, the recent market, the recent, week or two or so. So nothing really to say much about there. The one thing I don't like is the fact that we did close underneath the 5-day moving average again. So we couldn't, we stayed below it, then we stayed above it, now we're back below it. So that's kind of we're kind of all over the place. The market is being quite finicky. The RSI you can see is crossed back down under the average over here. You can see, which isn't good. It's pointing straight downwards. So those indicators aren't looking too hot, which is why there is a chance that we won't just get a straight bounce back up right away. We could, but you never know this market. This is definitely a very, very aggressive market. We're moving up and down literally 5% daily, whether it's up or down. But nonetheless, my overall stance still stays the same. I haven't really changed what I'm personally thinking is going to happen, when it comes to a bounce. Maybe we won't bounce as high as I thought necessarily because of this move being more aggressive to the downside than I expected. But nonetheless, I'm still expecting a bounce regardless. Now, let me explain why. So first of all, let's take a look at the indices, right? These are very important. Tesla moves, of course, more or less correlated to the indices, the SPY, the QQQ. So you can see here, actually, I'm actually, believe it or not, I'm actually very happy with the move today. And the reason is quite simple. Did I just know this by accident? I don't know if I did. I might have. And the reason is actually quite simple. So the past few days, the SPY and the QQQ have been gapping up several times, just essentially leaving fat gaps all over the place. And today, all in one day, we essentially gapped down. So now we have a gap up here, which is good. But we gapped down and we actually pretty much filled 2 or 3 gaps from the previous days all in one day, which is great. The main one being, of course, this one all the way down here at 392. We filled it. That's great. We unfortunately ended a tad below it, but not a whole lot. So it's not all that bad. It's fairly close, which is fine. But the point is that we did gap fill. Now, the candle itself on the daily isn't looking too great, but again, with that being said, I am still happy the fact that we did overall get essentially a gap fill, which I very much like. One thing you can also do is take out the Fibonacci, kind of go from the bottom up here to the top, kind of get a better sense, essentially what we can expect. You can see here bouncing off roughly close to that 0.786, which isn't too bad. Ideally, you want to bounce off over here, but I think maybe the pressure of the gapping over here is kind of what created the extra drop to the downside as well. But nonetheless, take a look at the QQQ. Very similar story. Also had a bunch of gaps that it created pretty much all in one day. It filled those gaps, kind of also getting rejected at the level of the gap as well. So again, I also would have liked the QQQ to finish just a tad higher than it did, but again, it's pretty close to being kind of where I want to see it regardless. So it's not a huge deal, but it also left a gap up a gap from the gap down this morning all the way up here at around 306, which I expect us to fill, especially if we look for the bounce. Now, the main thing, probably the biggest thing that I'm personally looking at right now that's kind of trying to signify whether or not we're ready to truly bounce as just the market as a whole, including Tesla, is of course the VIX. Now, the VIX is, of course, I talked about this before, the volatility index. Pretty much the easiest way to think about it, if the VIX is up, the market's most likely down, and vice versa. In this case, the VIX is up almost 20%, which is obviously a decent amount. Now, you can see that, for the past while, we have been in this kind of uptrend of the VIX, kind of bouncing up in this channel, and then we finally broke through it, and that's when we had the pretty much, massive rally in the overall market, which was this, right? So as the market rallied up here, you can see the VIX ended up kind of falling pretty much in line with the market. Going up. Now, with that being said, though, you can see, I've said this plenty of times in previous videos where it's not uncommon that when you break out of a trend, you retest the trend, reconfirm, and then continue the way you were prior to the retest. So in this case, essentially, the initial trend was we were going up in this channel. We finally broke down from it, which is good. That was bullish for the market. And as we broke down, you can see it fell quite aggressively. It fell all the way from like pretty much 30 to 25 roughly, right? And then we finally did a bounce off of this general level of 25, which tends to have general support around 25. And not only did we bounce, but we bounced right back up to the channel that we just broke out of on the VIX. And so far, again, this can change, but the main thing you want to be watching for is essentially a continued rejection from this channel. You essentially don't want the VIX to just casually get into this channel and start staying in the channel, most importantly. So we want to see a continued rejection on the VIX around this kind of 31 level. We don't really want to see it hold this kind of 31 to 32 level too long or too comfortably or whatever. So because of that, and as long as this maintains, and as long as this doesn't cross over into the 31/32 area and kind of essentially get back into the channel, that to me tells me that there's a decent chance that we are going to be looking for a potential bounce in the market as the VIX gets rejected and starts moving back to the downside. That's essentially kind of what I'm seeing, and which also will of course apply to Tesla as well. And that's pretty much my main factor that I'm overall looking at, right? Those are all the things that I'm personally looking at right now. That's kind of giving me, essentially confidence that, I'm not panicking. I'm not really that worried. I'll be honest. The thing that will make me worried, if you want to have like a catalyst to look out for, where it's like, okay, well, what do we want to look for if things do get bad, or if things will start looking a little bit, no bueno, let's say. Well, again, the VIX essentially re-entering 31 to 32 and staying there essentially into this channel. So safe to say, just say 31.5 to 32, right? If that happens, okay, that's probably not a good sign. And for Tesla specifically, what you don't want to see, in my opinion, is you don't want to see it break down under this low that we had over here on this candle on the 12th of May of this year, of course, just a few days ago, of around like 680 roughly. Like, you don't want to see 680 drop. You don't want to see it go lower than this. Maybe like by $1 or $2 at most, but you don't want to see it go much lower than that, and especially stay lower. That is where you don't want to see. And if that happens, then that's really bad. Then that tells me that there's a lot more weakness in the market than I expected, and that we're potentially going to be dropping even further down into the sixes, potentially 6.5 or 650 rather. Give or take, somewhere along the lines of that. So that's essentially what you don't want to see. So as long as we maintain above 700 ideally, but especially above the 680 level, and don't break below it, and essentially set a lower low, that would be overall not good. And again, that would just essentially show more weakness into the markets. We can take a quick look at the MACD over here. Might have to, yeah. Okay, let me go ahead and remove the moving average here for now. Pull out the MACD. So you can see the MACD actually, oddly enough, is looking not bad on the daily. You can see the MACD is actually surprisingly making a higher low, not a lower low, even though today was an absolutely bloodbath of a day, which in my opinion is a good sign. That to me is telling me that the market seems to have found a temporary bottom for now. The fact that, it's not really going lower low, even though we just had, a 7% negative day. So that's a good sign. I do like the fact that, it's not making a lower low, it's making a higher low. It's fairly even, but it is, if you look closely, just, ever so slightly a lower, a higher low. you talk about all these lower lows, higher low, lower low, you know, and it all gets kind of confusing. You kind of jumble the words a bit sometimes. But yeah, that's essentially what I'm looking at right now, guys. You know, again, pretty brutal day. Again, I will admit, definitely a bit lower than I expected. Didn't think we'd drop all the way down to 700, but I wouldn't say it's too surprising either. Again, mainly because we're not making a lower low overall. And again, as long as we bounce off of this general level, which so far we have shown signs of bouncing, we have dropped down to that level. And, you know, Tesla has shown some strength and has shown some signs of bouncing, which is good. Yeah, so as long as, you know, we don't really drop too far below this level, and then, you know, again, like I said, especially 680. Again, to me, all this means is that we're essentially just setting a lower, a higher low, which is good. Which is it's just kind of signaling that, you know what, the market looks like it might be ready to make a short term, again, keep in mind, short term move to the upside, and we'll go from there. But yeah, other than that, guys, you know, that's pretty much what I'm seeing. Another way you can also justify this or kind of get a better idea as to this move is you can see, you know, you can kind of look at this as like a very small bull flag, right? Where essentially from this level, we went all the way up here. Hold on, let me make the color a little different. So you can go, what is going on here? I don't know what's going on here. All right, so you can kind of justify something like this. Let me make the color a little different. Let me make it green. It's a bull flag. Make it light green, so it's a bit easier to see. Beautiful. Right, and then we'll make it a little bit thicker so you guys can get a better idea as to what I'm talking about, right? But you can essentially argue the fact that, you know, we are essentially making this kind of small bull flag over here, something like this. Right, something like this. Right, you can definitely make an argument for something like this as well, where we're essentially making a bull flag. It's a 1 touch point, 2, 3, 4. Right, like I said, this is the 4 touch point, which is good. And then, you know, essentially what you want to see is potentially even tomorrow or Friday, as long as we break above like around 735, we can say, as long as we break out of 735, this could be a quick little breakout of the bull flag. And then what you can do is take this pole from where we break out, let's say somewhere around here, right, roughly, and then you can measure the pole, and that's essentially kind of give you a, you know, general rough idea as to where you might break out and move up from the bull flag, which again actually perfectly lines up with around this 840 level, which is essentially my current projection regardless, right, the low to mid 800s. So that's another way to look at it if you want to get a better idea as to, you know, when maybe a breakout is confirmed. On top of that, of course, you have the 5-day moving average. That's another great way to potentially look at, you know, if we continue to close above it and actually maintain above the 5-day moving average, which at the moment is sitting at, let me go ahead and change this to 5, which at the moment is sitting at, where is it? It's like the colors are blue. I can't even see it. 738. Yeah, that's another sign as well. So, which actually kind of lines up with the breakout of the bull flag. So pretty much 735, I guess, will be a decent level to look out for, guys, as long as we can look to break up of that without breaking below. And then the VIX is, of course, getting rejected at 31. There's a lot of signs. I still think even after today, there's a lot of signs that are pointing to a bounce. Could be completely wrong, of course, guys. Don't get me, you know, I'm not trying to say I'm 100% correct. You know, be cautious, you know, just make sure you know what you're doing. But overall, I'm still bullish. I still feel bullish. I still think it's fine. I'm not too worried. But other than that, rather, yeah, that's all I have to say. Let me know what you guys think down below, and I'll see you tomorrow. Peace.